but hustling to get the cash in so we can grow the thing and make it better. And I think that's
Yeah.
quite important. That was a standout for me.
Yeah. I like that. Coming from our Portuguese roots, we always say cash is king. And I guess in startup world, that is
Absolutely.
very true.
Absolutely. And I mean, there's this old story. I mean, everybody's probably heard that, but Airbnb ran out of cash and there was a presidential campaign in America
Yes. Love that
over
story.
the election that Obama ran for. And they made cereal, like funny branded Obama
Obama
cereal,
flakes or
sold it
something.
on, yeah, on Amazon or eBay or something.
Welcome back, Renier. How are you doing?
Yeah, great. Thanks, Bobby. How are you?
Yeah, very good. Excited for our next episode of How Would You Build It? It's
Yeah.
lots and lots and lots to talk about. We were just offline trying to figure out what topics to cover because there's actually just so much to cover. We've got the bank chaos in America. We just off the back of an amazing event at Specno the other night. And then there's this big announcement of Payshap that's just come up. So yeah, quite a lot to talk about. I think, can we just maybe touch on the Specno event? I mean, very well organized. Specno brought in all the founders from around the country. We even had a guest from America that was there. You were the MC. I thought it was just fantastic to be surrounded by so many like-minded and ambitious people. What is your take?
Yeah, it was just an absolute energy in the room. You could feel it if you go in. Like there's a lot of people leaning in and wanting to meet people, wanting to talk about what they're building, wanting to learn, and that was just a highlight for me. Just so many people enthusiastic about building a startup in South Africa. It's quite. If you read the news or you talk to people at Bryce, it's just load shedding and doom and gloom. But when you walk into that room with all of these founders, it's just so much positive energy. I almost felt like, man, we should get all these people to come back tomorrow and just work together on all of their startups.
Yes, yeah, that would be amazing. That would be amazing. I can't agree with you more. I mean, the people, I think just what I've always said about South Africans is the tenacity. They just want to keep going. They don't sit back and take it. Like they want to figure out how to make a change. They want to figure out how to make a change for themselves. I mean, we must develop some amazing entrepreneurs and founders out there. And yeah, it was all on Showcase, and there were so many topics that came out of the conversation, and and that's kind of where we're coming from here. It's like, how would you build it? Like a lot of the people that were at this event were asking the exact same question, and there's actually so much behind it. But something that came up a lot was around funding. Like I couldn't escape that conversation, and I think obviously the market right now is a bit intense for the tech industry. But yeah, there was a lot of questions and like, how do you fund? Should you fund? Where should you go looking for funding? And then there was a few comments in the initial panel that said, they don't really back bootstrapping. So it's like, I just found it was very interesting. So what's your view on kind of the funding conversation?
Yeah, look, I think ultimately, if you bootstrap, you have all the equity, right? So that's the immediate upside. You have all the equity, and the decision-making power is solely in your hands, right? But that is an advantage and a disadvantage. Like the disadvantage being, obviously, you're going to be capital light unless you have money, savings or money coming from elsewhere. That's the first thing. And even if you were to use your own money, you're exposing yourself to quite a lot of risk, right? Which once again can be a good thing and a bad thing. It's a bad thing in the sense that, you're putting all your eggs in one basket, the startup that you're pursuing. But on the other hand, with so much at stake, you're putting a bit of pressure on yourself to make sure you make it work, right? So it's really those trade-offs. And actually, I think different things work for different kind of founders. So I think when you're a founder, it's really important to understand, like, do you, does it get you going to put that kind of pressure on yourself? Or does that kind of pressure actually pull you down and make you, unable to make decisions or unable to act? And I think that's really important, is understanding yourself and where you fit in that spectrum. And I think, that's really critical in various aspects of building a startup, is understanding yourself. Another example of this is, do you build in public? So a lot of founders say you should absolutely build in public. I don't think it's a good idea for some founders, but for others, it's a really good idea, because that's a sense of accountability. They don't want to look bad in public. That's really important for them, how they look in public. So making that statement, this is the progress I'm making every week, actually puts enough positive stress on them to move over into action and do things. So coming back to funding, there's different perks in terms of bootstrapping or not. I think the reality is it's really expensive to build certain tech. Philip from OfferZen shared how they bootstrapped OfferZen, but they spent 8 million rand of their own money to get it to a place.
Personal money.
Personal money, from I suppose from the founding group of people, and not a lot of people have 8 million rand lying around to actually get a startup going. And then again, it arguably, I would say, it might have probably been hard for them to raise 8 million rand at that point where they were at. Like, it could have been really challenging. There's not a lot of angels that would put that amount of money in a project, even for experienced founders. In South Africa, that's not something you hear every day, that someone was able to raise 8 million rand at an early stage, pre-revenue. So yeah, it's a difficult thing.
There was, so what was also great about the Specno event is that we all went into our separate rooms, and there were separate breakout rooms with conversations going on. And the room that I found myself in, as much as they try to veer away from the subject, it was an ask us anything, and they had a panel and you can ask anything, but every question was around funding. So, but yeah, one of the topics that came out is, and it's a thing that we've spoken about here on the show, is the whole grey listing, right? And people were saying, well, how difficult is it going to be for a South African company or South African, and this is important, a South African registered company to get funding from overseas. And the subject came about how we can use the likes of Delaware, Mauritius, or Malta for something like that to get money. And I know we've spoken about it. Any thoughts on kind of registering your company outside of South Africa so that you can get funding if that's the direction you want to take?
Well, because of the IP legislation, it's always been a challenge to get money from overseas anyway. So I don't think grey listing is making that worse. I think we're just exactly where we were to start with.
Fair enough.
But unfortunately, a lot of companies, specifically when your plan is to launch abroad, and capture that market, it does make sense to consider incorporating elsewhere and service those markets from there. And there's the Startup Act movement, and they've actually engaged with the president himself, and they're constantly working in a very positive way. And you can Google Startup Act South Africa. A lot of industry players playing in that space, trying to get government to relax the legislation around the IP laws. Now, for those of you who don't understand, it's kind of like if you invest, or if a startup in South Africa gets an exit, or there's money, there's a liquidity, it's really hard for people to move that money out of the country because of exchange control rules. And not only that, there's certain things prohibiting people from moving the IP offshore as well. So even if you buy the company from overseas and you go, cool, I want to internationalize this, I want to move the company, to wherever the headquarters is of the big corporation that bought it, that's not a simple thing to do. There's massive taxation that takes place. And it's just a prohibiting factor for many overseas companies to not only invest, but also acquire some of the startups that are doing amazing work. Now, where this originated is, if someone wants to go down the rabbit hole, it all happened when Mark Shuttleworth sold his business back in the 2000s.
Correct.
And he had a massive tax bill because of that, and there was massive issues. And ever since then, this has been a hot topic in startup world, and something that we've been trying to get to government. And let's be honest, government's plate is quite full. Most startups would say this is the most important thing that governments needs to do. And I believe it ranks up there, because I think this is going to open up channels for investment to come into South Africa. So grey listing, I don't think it has that much of an impact. If we can relax some of the legislation around IP and taxation of that, then I think we'll move forward.
Yeah, no, I agree with you. And I forgot about the Mark Shuttleworth story. I mean, that was huge. I mean, at the time, with the billions of dollars that people were throwing around, is still a lot of money today. And that was like over 10 years ago. So yeah. And I mean, it's you look to that room, and I mean, I would love to have actually known how many different founders were in that room, and everyone was trying to take their own piece away, and they're all in their own journey. But from those conversations, it's like everyone's talking about funding. It sounds like most of these startups are kind of in that startup, like just getting it off the ground. Because, if we had to say to ourselves and had to label the show, how would you build a startup? I mean, just getting funding is one thing. To find what your market is, to figure out, what your product market fit is. I mean, if you were to start up now, what would you look for first? Like, where would you go first, Renier?
So Bobby, I love that question because it kind of links with the funding thing, right? And if you look at OfferZen, even though they had some of their own capital, one of the statements that Philip made is the business model that they chose and the approach they took was specifically one that was cash flow generative, right? So they were placing candidates. If you're not familiar with OfferZen, they place developers in software companies, a recruitment company, if you will. But they literally started just making placements. And every time you placed, there was a 12.5% of the annual salary as a fee paid immediately, right? So they were generating a lot of cash early on, which could help them actually finance the build of this thing going forward. So it wasn't, let's take 8 million rand in 3 years and build a product and launch it and see what happens, right? They said, no. We need to make sure we get cash from day one. And that's the approach they took, right? I had a really interesting conversation with Brett from OfferZen, also one of the co-founders, around how they're shifting that model now in time. And in a few months, a lot of that's going to go live. But it's interesting. But they took that route specifically not because it was necessarily innovative. That's how the industries work forever. But it was cash flow generative. So my advice for startups would be, don't spend too much time trying to find funding when you feel like funding is the problem here. Your problem really is cash flow. The problem isn't funding, right?
Yeah.
Now your cash flow problem can be solved with funding, but if there's a way to generate cash flow through whatever means, then you can make progress bootstrap.
Yeah.
So biggest problem for us not being able to continue to move forward, right? So if you're a builder, well, at least you can continue building your product. You can have a full-time job somewhere as a software developer and you can continue to build a product at night, right? So that's an example. You sell some freelance hours and, use those hours to finance you while you're busy building your product. But if you're not a builder founder, you stand still if you don't have money, right?
Yeah. Yep.
So that's where you need to hustle. That's where you need to figure out, how do I do something that generates cash for me right now? And, even if that's a small amount of cash, if you can generate 1,000 rand and that 1,000 rand can go towards Google ads or Facebook ads, it can get you 5 more meetings with potential customers. Well, that's 5 more meetings you wouldn't have had if you didn't get that 1,000 rand in. So I think that's a key thing, is cash flow early on. How do you generate cash ASAP? Even if it's in small amounts. It's the same with SaaS. If you think about it, like SaaS starts out, any SaaS business starts out with, 200 rand a month subscription. You go, cool, I sold one subscription. What am I going to do with the 200 rand? It's not as though I can live of it. Sure, but that 200 rand can pay for an ad that can get another 2 customers, right? And that number 2 can get another 4, and that number 4 can get another 8. And it builds like that. And if you go 3 years down the line, you've bootstrapped a SaaS business that's generating 50% EBITDA margin, and that's how these things get built organically, as people focus on cash flow early on. So any startup out there, how can you hustle to make sure you get cash for the business in order for it to grow? Sometimes people say, no, I need scale. I mean, I can give you an example in the newsletter. We're looking at a lot of affiliate deals. So not charging people, but saying, look, if we manage to help you do something, pay us pay us a success fee. Right, so there's much less risk, easier to sell, but hustling to get the cash in so we can grow the thing and make it better. And I think that's quite important. That was a standout for me.
Yeah, I like that. Coming from our Portuguese roots, we always say cash is king. And I guess in startup world, that is very true.
Absolutely. And I mean, there's this old story. I mean, everybody's probably heard that, but Airbnb ran out of cash and there was a presidential campaign in America.
Yes, love that story.
The election that Obama ran for. And they made cereal, like funny branded Obama cereal,
flakes
sold it on Amazon or eBay or something.
Yeah.
And then they maxed the credit card to manufacture the stuff, and they sold like $50,000 worth of cereal. Yeah. And that kept them going for 3 more months. Yeah. Now, that is an extreme case of hustling to keep the doors open. Not something I would necessarily recommend, but hey, you got to do what you got to do to get the cash in.
And like you said, in that way, by doing that, they were able to keep equity. And that's a big topic.
Trying to chase investors that are probably not going to invest anyway.
Well, Aaron said it in the breakout room. He's like, he's seen at least 500 of which maybe 50 spoke to him. Well, I think the number was even less, but he had met 500 VCs for them to get, some of the investment that they needed. So yeah, it takes a lot to go and chase the amount. I think he was talking about how the 2 co-founders split ways. One focused just on getting funding while the other one focused on the product. But yeah, I guess there's less pressure if you don't have to go find funding.
But I mean, imagine the cost, not only financially, of getting one of the key people in the team who just spend their time on trying to raise funding, while you're actually busy trying to freaking build a product. Like, I mean, I could argue in most cases it's better time spent, building the product, hustling for cash, and trying to get something that makes the thing move forward.
Yeah, which is interesting. I think it might not affect us as much, but if we always say, if the US sneezes, the rest of the world gets a cold. And ties in really interestingly to how the whole SVB issue in America, the Silicone Valley Bank, almost or has gone under in the last 72 hours. And for those people that haven't been following the story, the SVB Bank actually is a bank that kind of looks after the startup founder world in Silicon Valley. And so what we've had for the last, I don't know how many years, is the fact that in America, they've had zero interest rates. So it was quite easy to lend money. So you could either lend money, people were willing to give money because there was like literally 0.1% interest rates in America. There was so much free money going around. And so for founders, that was the go-to because there was just so much easy money to find. But we've seen what happened with all the money printing and everything, and the inflation came around. And so the Fed started raising interest rates. I mean, they went from 0.1 or whatever it was to 5.25. I mean, that's a massive increase that has absolutely disrupted the whole financial system. And I think that's why everyone's, waiting for a recession to come in. But the point is that the bank almost went under until this morning that they decided they were going to bail out the depositors. So that's if you have put money in the bank, they're going to bail you out. But if you are an equity holder in a founder in a startup in America, you might not get anything back. But at least what would happen now is that the founders are going to be able to do payroll. They're going to be able to pay the people in their startups. It's a massive story. And like they were saying, like that's like the innovation hub in America, is where all the great startups started, was in Silicon Valley. And that's interesting. So you've got that culture of going to the bank for money or getting all these venture funds in their money to, locked up in a bank. I don't know if we'll ever have that problem here, but very interesting story that's come out over the last couple of days.
No, it's fascinating, and anybody interested in economics or how banks work, it's just this unbelievable event, right? So you had the deposits went up 3 times, I think from 60 billion to 180 billion in a 2-year span, which is insane. And then on the other side, because the interest rates went up, a lot of people started pulling money out, going, you know what, we can get more than 1.5 interest on our money than what these guys are offering, which is normal, right? But then on the back of that, these guys bought what many would consider as a safe instrument, which is a long-term bond, a 10-year bond from government. But because the yield on those bonds went down because of the interest rate compared to the interest rate, a lot of people lost interest in that, pricing it lower.
And the bank was buying
then all of a sudden they made a loss on those things. So it's just this incredible event of a design flaw, if you will, in everything that played out. And on the one hand, a lot of people are upset with the bailout and what is happening. There's this culture of bailing out banks in America. But on the other hand, if you think about the individuals, at the end of the day, it's people that have, money in bank accounts, and never mind individuals, startup companies that want to pay salaries. So, and not only that, companies that have invested in startups, individuals that have invested in startups that now stand to lose their investment simply because of something that's not their fault.
Exactly. Now, just think about how many times we've used the term AI and the developments in AI over the last couple of weeks on the show. Where do you think that AI innovation is coming from? It's literally in those places where that
startups.
Exactly. So that's what they were saying, is that it's going to kill the innovation. Like all these startups are doing some really amazing things. They just get cut at the knees and development stops. So the Fed had to jump in there.
But interestingly, I mean, there's this saying in economics that says, central banks raise the interest rate until something breaks, right? And they were bound to raise it for another 50 basis points.
Yeah, exactly. Powell was just the other day saying that we're going to carry on.
Going to keep going.
Yeah.
So I think he's going to change his mind. So something broke. And they're probably going to, this is where the flat line of the interest rate hikes will probably step in, right?
Yeah, exactly. The question is what happens to inflation?
I'm not an economist. I have a mild interest in it, but by all means, this looks like what could be the start of a recession. In South Africa, we've had negative growth, 1.3%, I believe, in the last quarter. So, with this global impact spilling over this side, chances are we'll have back-to-back contraction of the economy, which would qualify as a recession. And yeah, look, at the end of a recession, we have another bull run. So it was inevitable with all the crazy circumstances that have been going out in the world. So recession likely incoming. And that's where, we just spoke about how cash is king, hustle to get the cash in.
I was about to bring it back.
This is the hustle season. Like, if there's anything one can do to get cash in, you need to get cash in. Like,
I think the writing's on the wall on that conversation. If you think about it, just think. I mean, we were around. I don't know how many people were or weren't around or still in school, whatever. But in 2008 and 9, when that global financial crisis happened, I mean, things got bad. I mean, it was really, really bad. I mean, we can't say it's going to happen again, and I'm not here to kind of put fear in people's minds. But the point is that if you are a founder or a potential founder, maybe that first thought is not go look for funding, but figure out exactly what you mentioned earlier, which is figure out the bootstrap, figure out cash flow and I guess another important thing that is for another episode all on its own, but like, what industry would you go into right now? I mean, you don't want to you got to be very specific, make sure that there is a need behind what you're wanting to build, because you're going to need to make cash flow as soon as possible to survive.
I actually think, Bobby, it's probably worth people considering what kind of business models in which kind of industries can they pursue, which is cash positive.
Exactly.
Like, it's a highly lucrative generate cash quickly kind of models, because those areas I think are ones that will survive in the upcoming season. And you know what, 2008, 2009, that's when I started a business, my first business. And I was just cheap. It's really hard to make sales in business, like, but not really understanding, what's cycle. Happening. It was just really tough. I think the upside of it, which I can encourage everyone with, is it lasts normally 6 to 12 months. And after that, it's just substantially easier. So if you can make it through the 6 to 12 months, after that, you would have hustled so hard that you have now leveled up in terms of the hustle. That come the next bull run, it's going to be substantially easier for you to make progress in sales and grow your business. Which actually in itself says there's opportunity now. If one can survive and build in the next 6 to 12 months, I think coming out of that, there's massive opportunity for growth. So very, be alarmed, but also be excited. Because
I agree with that statement. I agree with that sentiment. I just think about, people that are starting startups right now, the lessons they're learning through pain. I think that's one way that you learn how to do things, get scar tissue, and then it brings you out stronger on the other side. And I think that's exactly the cycle we're about to go through. Actually, I didn't expect it, but that segued really, really well in terms of kind of the funding and the experience that's happening in America. And could it come this way? I guess yes, because where does a lot of our foreign direct investment come from? It comes from overseas. It comes from places like America. And if there is an earthquake there, then it's going to affect us as well. So,
well, I think the other thing, Bobby, that's quite interesting is, what does this mean for banks in general, right? Because there's something called fractional reserve banking, which means all banks are vulnerable to what they call a bank run, right? Now, a bank run, in the most simplest terms, is too many people try and withdraw their money, and the bank has to adjust their balance sheets on a very short turnaround time to make sure that they can honor these liabilities that they, the money they owe these people that are withdrawing. And then sometimes it leads to these kind of events, right? And that's now the system that we've designed is the central banks underwrite this risk to a certain degree for these banks, but there's a real risk for a lot of banks around the world, even locally. Now, some people might recall a few years ago there was that company that I think they shorted Steinhoff. But they brought out a report on Capitec and some of the stuff happening at Capitec in an attempt, obviously taking out a short and in an attempt to affect the stock price to a certain degree. But then I remember within 24 hours, the Reserve Bank brought out a press release saying everything's fine, the money is fine, and it was actually. Thinking back to that moment, I have a lot of respect for how the combination of Capitec and the Reserve Bank stepped in and acted quickly to prevent a bank run, right? Because a bank run is not good for anyone, not for the country, not for the bank, not for the depositors. There's too much at stake when that happens.
The contagion.
But this whole event for the 16th biggest bank in America to go through this, without, you know, I mean, mistakes were made, but it's, you know, it's not a glaring fraud being committed or something
That's
extremely
the thing.
stupid. Yeah.
That
so
is
it's
the
quite
thing.
scary to see that happening, because, you know, now we have banks all over the world going, okay, what's happening on our balance sheets? You know, what kind of risk are we exposed to? And I think, you know, everywhere there's a bit of people pulling money out of bank accounts or diversifying a bit.
Yeah.
And this really poses the question: if we move more into this world of decentralization, what does the future bank look like? Are we going to do the same thing where we have central banks underwriting fractional reserve banking and making, you know, allowing these banks to do these things, or are we set for an entire new model? I mean, there's reasons why this model works. But there's also obviously some serious downsides of people losing a substantial amount of money. So yeah, a lot of interesting things I think are going to come out of this, and all of this just, you know, kind of signals, you know, we need change in the payment space. We need change in how these things work. Which is one of the other things we're going to talk about. Is this exciting thing?
You're setting us up perfectly. I love it.
On the 13th of March, which is Payshap, which is a new way to pay interbank in South Africa. And it launched it was an initiative that was started in 2017 with research, a research project of saying, you know, how do we kickstart the economy and also include more people in the financial system. And I think, you know, for me, always one of the biggest challenges was interbank payments. Like, I would get someone doing a service at my house and I go, listen, I need the money today. Like, which bank are you? And then I'm like, I'm at FVB. And I go, oh, thank goodness, me too. You get the money immediately, right? And this has always been a challenge, right?
Yeah.
And a direct transfer, I can't recall the exact fees, but it's something like 30 Rand or something.
Yeah.
So now you have to pay someone 250 Rand, but you have to pay an extra premium of, you know, 15% to get the money in the account immediately. Now, on the back of this, if one understands how the banking system works, you know, there's reasons why instant payments isn't a very simple thing to do. You know, some of the risks that these banks need to manage from a balance sheet perspective, and some of these things that can need to a bank run needs to be managed. Those ledgers needs to be updated, and updating these ledgers real time has some risk associated to it, right? So if funds move from FNB to Nedbank, or, you know, one bank between the other bank, there's ledgers that needs to be updated, and they need to manage the risk of these ledgers getting updated, and doing that in real time isn't simple, right? But BankServe, which is owned by the four biggest banks, Nedbank, Standard Bank, FNB, and Absa, they started working on this project to say, okay, how can we facilitate payments, you know, rapid payments at a low fee? So they've rolled out what they call Payshap, which is a pilot project, I believe, for 6 months. And at the moment, in your banking app for those 4 banks, and I think they're launching 5 more soon, which will include Capitec and Investec and Time Bank and some of the others. It looks like you can do a transfer from Nedbank to another bank, transfer up to 3,500 Rand at a fee of 1 Rand per transaction, and it appears immediately on the other side.
And now, this is through a cell phone number.
Yeah, that's so the second part, which is quite exciting, is you can actually pay it to a cell phone number, which is really cool, right? So for me, this is one of the biggest things to have happened in tech in South Africa in a very long time. It's
like
going to reduce the friction. This is insane. Like, they did a similar project, by the way, in Brazil, and the adoption just shot through the roof, and it just contributed to an enormous amount of economic activity. And, you know, economic activity, most of them have taxable events. And taxable events generates more tax, which, you know, in a functioning government could lead to more infrastructure development, which benefits all of us, right? So the more a Rand transfers hands in South Africa, and the faster it does, the better for all of us.
They call it the velocity of money.
It's really going to be an enabler. It's going to, you know, and they said one of the ideas is it should eventually replace cash. And I think at these low fees, it has the opportunity to do so. So 1 Rand transaction fee at a 20 Rand transaction, that's a 5% margin. You know, now we're kind of in the space of credit card transactions that range between, I don't know, 2% and 5%. So if we get it under 1 Rand for a 20 Rand instant transaction, now we're going to open up a whole host of opportunities for people to use digital money. So quite excited about that. Find it quite ironic as well. People have been fighting for years to build blockchain solutions to be, you know, payment solutions, and, you know, the traditional rails are still working fine. I do believe there's a case to introduce smart contracts in the back of all of this. But it's going to also be interesting to see how this scales, right? Can it do a few thousand transactions per second, which will obviously be a requirement of the system if it's going to be rolled out countrywide. Interestingly, the product in Brazil as well, that's one of the reasons why WhatsApp is piloting payments in Brazil, is because of this system that is available. So I can see WhatsApp already, if we get the system mainstream 6 months from now and, it's adopted and functioning well, I can see South Africa becoming another candidate to allow WhatsApp payments.
Definitely.
And I think that was one of the ideas as well, saying, okay, how can we now pay each other via WhatsApp? So very exciting stuff there. Also very exciting for WhatsApp's play to become a super app in South Africa. If you think about it, they're perfectly positioned, so many phones using them. If you introduce payments into that mix, you can see some really interesting startups launching stuff on WhatsApp, getting real-time payments and getting real-time settlement of payments, which I think is super important for a lot of different kinds of businesses.
Yeah, exactly. I think the big word here is going to be disruption. Again, referencing my time at Sweep South, I mean, we were built off an escrow kind of business model where the money would come in, we would be the custodian of it until we would pay it to the next person that deserved that money. Now, what's going to happen to that? The whole system is going to get disrupted, is going to change, because like you mentioned, somebody can come and, do my plumbing. What's your number? Bing, thank you very much. Appreciate the help. And off they go. So business models are going to have to change, because now maybe you just need to be a like a directory, instead of having to have that payment gateway middleman. Because so what's going to happen to the middleman?
No, I think this is really solving that problem, right? So all of these escrow services, and there's quite a few different ones of them. They're going to have to change and adapt to these new kind of models. But I think people really underestimate the power of making rands move through the economy faster. Like if the guy who did my plumbing today can get paid today, he might buy McDonald's tonight, right?
Exactly.
And him paying McDonald's tonight means McDonald's makes money faster, which means
they can do
more, they can hire more people, they can open up another branch, employ more people.
Exactly.
So all of this, just moving everything 2 days faster, is going to accelerate the economic activity substantially, which in the long tail will have a massively positive effect on our economy. So super excited about the economic impact of this. But also, I can just imagine so many startups that are going to launch out of this. If you think about it, like getting paid instantly at a super low fee and being able to, in the past, startups, when they looked at a total addressable market, you typically have to look at, well, who has a credit card? Okay, now we're down to 5 million people in South Africa. Okay, that's great. Only 5 million people can buy. They're not even in one city. They're all over the place. It's so hard to get to them. They're fragmented. Such a fragmented marketplace. But now you're looking at it going, well, even people that are, on social grants could be able to buy certain things. Now, I'm not saying, let's go sell stuff to people that are on social grants that don't need it. But I'm assuming there are things that they would want to consume in a digital and a physical environment and be able to pay using this new payment solution, doing an instant transaction. And I think that's going to open up so many different opportunities for startups. I'm really excited about that.
I'm interested to see what happens, because we all know that a lot of the lower LSM, the people getting the social grants, what do they do when they get their money at the end of the month or whenever they get it? They go straight to the ATM and they withdraw it and they go and spend it. Now we're going to tell them you don't need to do that. Like, I've always wondered, like, how do we change that behavior and say, well, there's a lot easier way, or, you don't have to worry about carrying that money with you, because there's also crime to worry about. To say, well, just as long as you got your phone, you can just quickly make that payment. And I'm very curious to see, like, you've used Brazil as an example. I just wonder, like, how it will relate to the South African market and the behaviors that are so entrenched in our society.
Well, that's an awesome point, Bobby. And I mean, that I think it's so relevant for so many people that, they have to draw the money and kind of spend it before it gets stolen or something else, right? So, the spending behavior is definitely going to change as well when people are not forced to get everything into cash immediately. So, not only will they be able to buy other products and services, but they'll be able to keep money for a longer period of time without having been forced to spend it. So a lot of that is going to change. I think it's going to be a shakeup in that space. And a lot to be excited about. I think startups should be licking their lips thinking about how they can offer services and solutions using this.
Yeah, I think that's a takeaway. I was just thinking about, as you were saying that last statement, is like, think about what business you have and how this could benefit you. You know,
Yeah.
it's part of the reason why we're doing the show. Yes, we talk about startups and founders and stuff like that, but you could be a business that's been going for a long time, and this could be your advantage to take your your competitive advantage to over the next business. So yeah.
So how would you build it? I would build it using that as a payments mechanism, because I think it's just gonna it actually opens up your business to a market of 50 million people immediately.
So what does one have to do then? Do we understand that yet? Because I haven't done the research.
Yeah,
Can you tell us?
So for now it's a pilot project, so it's very limited to being able to make transfers in your internet banking. So if you log into your internet banking, you'll find an option over there, and then you can actually use it like that. I think in time they will open up APIs.
Do both people need to have it, or if I'm just one person, I can just send
on your internet banking side? Yeah.
Oh, really? So if I want to pay someone, as long as I've got it on my bank app.
Yes, and then you pay the fee on your side, and then the money goes that way immediately.
Interesting.
So that is that for now. I didn't read this in any documentation or anything, but I do assume they'll open up APIs at some point. I can't imagine them building something in 2023 and not having an API.
Open API.
But that API is really gonna, that's what's gonna power it. Like if we can make payments easier than what it is to make credit card payments today. I mean, typing in that 16-digit number. I mean, yes, we've got safe credit cards in some places, but typing in that number isn't really that user friendly.
Yeah.
So if we could just go, listen, we're going to verify it's your phone number, and there's some mechanism to verify that it's you making the transaction, and that just goes forth and makes a transaction like that. I think it's going to be an amazing experience.
So if you were Snapchat, or not Snapchat, what's it? SnapScan, or the equivalent Zappo, what would you be thinking right now?
That's a difficult question, right? I'm not sure what their strategy is, but if anybody is playing in that space, strategy definitely has to consider the impact of what this would bring forth, right? People think people are loyal to certain things. People are loyal to convenience. I mean, I was loyal. No, sorry, SnapScan. I used SnapScan forever until Apple Pay came to my phone. I don't know when last I used SnapScan, because Apple Pay is just a double-click, scan my face and tap, right?
Yeah,
it's just substantially easier.
It's brilliant, I know.
So and a very similar thing, if you think about Mixit was dominating, one could argue, on a worldwide scale in terms of instant messaging, right? But WhatsApp made it substantially easier because the push notifications on the smartphone just work better.
Yeah.
Right. So Mixit, you had to freaking log in to see if you had messages. So I had to open the thing all day to see if I had messages, right?
Yeah.
And then
the dopamine was helping you with anyways.
Sorry?
The dopamine was helping you with that anyways.
Yeah, exactly. So WhatsApp did that well, and then the convenience, people are loyal to convenience. They just saw that thing and they're like, this works better, so here we go.
Exactly.
So I think it's very important for anybody in that space to just consider the fact that it doesn't matter what tech you have in the back. I sometimes see crypto purists or blockchain purists take the same approach mistakenly, going, yeah, but blockchain is better. It's like, well, if the experience isn't better, no one cares if it's blockchain or not.
Oh yeah, UX is a big. I completely agree. I can't argue that point. Yeah, it's the UX, it's the convenience, and we're getting fussier as the technology improves. As humans, we are getting fussier. If there's more buttons to press, the angrier we are. Make it easy for us.
Exactly.
Yeah.
So one can imagine that. I think in India there was a similar thing as well, this instant payments thing, but Google Pay integrated that into making Google Pay compatible with that thing.
Yeah.
And I can see Apple and Google eventually doing the same thing in South Africa. So you can double tap to pay with your credit card, or you can double tap and one of your cards is your Payshap account, and then you link to a specific bank account, and then you just pay from there. So I can definitely see that as happening as well. Tapping on different phones, phone to phone payments, using that as a solution. I'm excited. I think there's big things to come in this space.
Yeah. I think on that note, we're going to have to call it a day, but quite an interesting and exciting episode. I thoroughly enjoyed our conversation today, and just how it all tied in together in this ecosystem of starting startups, understanding the payment world we live in, and all the structures that kind of facilitate making these startups work and disrupting them. So thank you very much, Renier. And we'll see you next week.
Thanks, Bobby. All the best.
Cool. Cheers, man.